Hello, and you're welcome to Global Business Insights, where you get more details on key business headlines across the globe. Canada's central bank is the first apex bank in the G7 to loosen monetary policy in the current cycle. Tiff Macklem, the governor of the Bank of Canada, announced it had lowered its policy rate to 4.75% on Wednesday, having held it at 5% since July last year. Q1 GDP growth of 1.7% was below expectations for 2.2%, while an unemployment rate of 6.1% in April was the highest in more than 2 years. In Canada, the headline inflation rate was 2.7% year on year in April, above the Bank of Canada's 2% target. The European Central Bank is widely expected to cut its benchmark interest rate when it also meets tomorrow. A slew of PMI data came in today. US service sector business activity ISM Institute of Supply Management PMIs showed the PMI data recovering to 53.8. That's in May from 49.4 in April. Services PMI in Germany increased to 54.2 points in May from 53.2 points in April 2024. Meanwhile, Eurozone services PMI was largely unchanged, but the composite index was up 52.2 in May from 51.7. The S&P Global UK Services PMI was down to 52.9 in May 2024 from the one-year high of 55 in the earlier month. We also got earlier China's Services Purchasing Managers Index up from 52.5 in April to 54.0 in May, also beating expectations of 52.6. The rise in new orders shored up a consumption-led economic recovery in Q2 as we saw the composite PMI, which includes both manufacturing and services activities, spiking up to 55.6 from 53.6 in April, also marking the quickest expansion since December 2020. Crude oil prices today attempted a recovery as futures rebounded slightly but still hovered near a 4-month low as a decision by OPEC Plus to increase production later this year, though keeping most of its cuts intact, and also the tepid global economic growth continued to weigh on the market. Brent crude still under $78 a barrel. And in the US, service sector business activity today showed a recovery in May, with the ISM Services PMI recovering to 53.8 from 49.4 in April. This reading was also above market expectation of 50.8. The prices paid index, which is the inflation component, was lower to 58.1 from 59.2, and the employment index also recovered to 47.1 from 45.9. Respondents also say that overall business is increasing, with growth rates continuing to vary by company and industry, though inflation and the current interest rates remain an impediment to improving business conditions. Still, in the US, the automatic data processing ADP private sector employment report showed jobs rising by 152,000 in May, and annual pay also up 5%. This was after the 188,000 increase, revised from 192,000, recorded in April, and less than expectation of 173,000 jobs. Nella Richardson, chief economist ADP, says the labor market is solid, but they are monitoring pockets of weakness as job gains and pay growth slow down going into the second half of the year. Yesterday in the US, the Labor Department's job openings and labor turnover survey showed that job openings are down to their lowest levels since February 2021. Employment vacancies slipped to 8.06 million for the month. And on Friday, we will get the non-farm payrolls data reflecting a wider labor sample base. May non-farm payrolls are expected to show growth of 190,000, slightly higher than for April. As mortgage interest rates moved slightly higher, the total mortgage application volume fell 5.2% last week compared to the previous week, according to the Mortgage Bankers Association index. Applications to refinance a home loan fell 7% from the previous week and were 5% higher than the same week 1 year ago. Wall Street is digesting the data, today opening higher as investors ramped up bets for an earlier than expected start to interest rate cuts by the Federal Reserve, with economic reports signaling a weakening labor market and somewhat slowing economic growth. There is an interesting bifurcation in US stock markets. Equities that are dependent on interest rate trajectory and need rates to be cut to reduce their cost of borrowing and boost consumer demand, and others, especially in the big tech, artificial intelligence hyped space, that only need to feed a narrative that a most unclear AI-driven advantage will push growth exponentially, irrespective of interest rate moves. Technology is not completely immune from the sluggishness, as personal computer sales are expected to be at best flat, if not lower, in 2024. Consumption appetite in China continues to cool. Most smaller companies who need to borrow money cheaply to boost revenue are in the first category. Cooling demand is increasingly reflected in the US Institute of Supply Management manufacturing data we got on Monday. The Atlanta Fed's GDP Now model, their latest real GDP growth, puts it at 1.8% in the second quarter, down from the 2.7% forecasted just last week. The concern for many is that chances of an unexpected economic slowdown seem to be rising, meaning a material correction in stocks could be looming. Still, latest data on chances of a September rate cut in the US was just over 50% on Monday. And still on PMIs, the UK Global Services PMI came in. We saw the headline measure from the survey at 52.9, lower than April's 11-month high of 55, indicating a softer rate of expansion that was also the slowest since November last year. In Germany, we did see the German business activity, that's services, going up to 54.2 in May from 53.2. The improvements in PMI are largely due to easing inflationary pressures, especially midway through the second quarter. In Germany, the rates of increase in both input costs and output prices were reported to be the weakest for 3 years, also driving the upturn in business activity, and of course that also helps the demand. In Germany, services firms expect business activity to continue rising over the year ahead, with hopes of increased demand for investments and a growing willingness to spend among customers, supported by lower interest rates. We'll see what the ECB does tomorrow. The degree of optimism towards future activity was also the highest in Germany since February 2022. And in the Eurozone, May services PMI broadly unchanged to 53.2 from 53.3. The composite index was slightly higher in May at 52.2 from 51.7. If you look at the composite indexes in Europe, May PMI, Germany was 52.4, a 12-month high. Spain, 56.6, a 14-month high. Composite index for May, Italy, 52.3, a 3-month low, while France, 48.9, a 2-month low. Also in the Eurozone, amid stronger optimism and a sustained uplift in new business, Eurozone companies, they're also raising their employment for a 5th consecutive month. I'd say that we're seeing improvements across the board. In Europe, the big economic question is if the ECB will cut interest rates or not. While most economists still foresee this week's initial move, some argue that sticky inflation, rapid wage growth, and more robust Eurozone output will constrain further monetary loosening. And we are seeing a dialing back of rate cut expectations. Indeed, inflation picked up to 2.6% last month from 2.4% in April, which was more than expected. And extended divergence with the Federal Reserve that has signaled that US rates may have to stay higher for longer to ensure inflation returns to 2% could be an issue, and it could weigh on the euro and could stoke new price pressures. The Chief Civil Servant of the Treasury, James Bowler, Treasury Permanent Secretary, has distanced himself from Rishi Sunak's claim that Labour would put up household taxes by £2,000. The claim was made in a fiery televised debate and said to be from an independent analysis of Labour's plans by civil servants. Debates help us to understand what politicians have to offer, and Sunak and Starmer in the UK were in the ring yesterday. After the debate, a Snap YouGov poll says 51% of 1,657 viewers felt Rishi Sunak performed better in the debate. The fiscal strain on British citizens in the last few years has taken its toll on voters who patiently bore the burdens, and of course they will be avenged on the 4th of July. Starmer was smart to harp on a difficult period, the culmination of the 14-year track record of the Conservative government, claiming he is the best alternative, but giving very sparse details on what exactly he would do. He plays a Ming-verse strategy, which is cautious and offers little, but admits more windfall taxes could be coming for oil companies, and those who can afford it will be made to contribute more to the fiscal purse. Sunak is as silent and apologetic as he can on the past, vowing to make amends by cutting taxes, but warns of a coming avalanche of new taxes from a new Labour government would make wallets even tighter, adding that wallets now need some relief. A Labour government spells some uncertainty for business, but markets have had a lot of time to prepare for it. Kingsley Moghalu, a former deputy governor of the Central Bank of Nigeria, says Nigeria's level of productivity cannot support the 400,000 naira minimum wage the Nigeria Labour Congress is demanding. Moghalu said the demand is deserving but not realistic. Instead, recommends a much lower minimum wage that the level of productivity in the economy can support. The union's demands include raising the minimum wage from 30,000 naira, that's about $22.04, to 494,000 naira, that's about $369.6. The government had proposed a 100% increase to 60,000 naira, which the unions rejected, seeking a 1,547% increase instead. Still, minimum wage in Nigeria is lagging behind if you look at other countries in Africa, not near the top 10, and calls for increase also justified by high inflation in the last few years. Moghalu is recommending a minimum monthly wage of between 75,000 naira and 100,000 naira. And in Nigeria, labor unions suspended their general strike that affected the Nigerian Exchange Limited, financial institutions, schools and public offices, as well as airports and the national power grid. The view of EVI is that the first priority of any decent employer is to be fair to its people, protecting them as affordably as possible from inflation. Nigeria could be able to fund a higher wage bill from drastic cuts in other governance costs, as analysts still point out that despite progress in many reform fronts, fiscal discipline is a red flag for the current government. Labour suspended the strike, but only for a week or so to enable government to make a better offer. However, Labour has also hinted that after agreeing the minimum wage, they will return to the reversal of hikes of electricity tariffs. So it's not yet Uhuru. European stocks are higher today as investors in the region look ahead to tomorrow's meeting of the European Central Bank, where an interest rate hike is expected to be executed. US stocks mixed to slightly higher by late afternoon as expectations for earlier Federal Reserve interest rate cuts increased, and Friday's non-farm payrolls could be the next catalyst. Well, that's it from me on Global Business Insights. This is Bode Oshosani. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Thank you very much for watching. Bye-bye.